Our government has actually been spending money into our economy, which gives people the false sense of
we're doing great.
No, we're not. Will the government pull back on the immigration numbers the way they say they are? I don't know that they're going to. The reality of it is we needed it to drive an economy that is slowing down.
Oh, real estate's back to 2019 levels. No, it's not. Read my lips. It is not. If you bought a condo at the tippy top, yeah, you got your ass handed to you. We told you not to buy condos at the tippy top. It was a dumb move.
If we stop bringing immigration into this country, which has been driving our economy, again, when people move into a country by the hundreds of thousands, by the way, what are they doing? They're buying, they're spending money, they're setting up house, they're trying to get jobs. That is part of what has been driving our economy. On top of that, real estate. Well, we've had one of the major parts of our driver, real estate, slow right down. Then we've had now the conversation of non-permanent residents going to be cut back. Okay, well, we're not a productive country. This is the challenge that we face. We have a huge public sector who are working. Our government has actually been spending money into our economy, which gives people the false sense of
we're doing great.
No, we're not. And we've been beating this drum for a long time. So when we look at what's going on global macro, we think about wars and oil prices, we'll talk about bond yields. There's a lot of things going on. Ultimately, we have to say, okay, will the government pull back on the immigration numbers the way they say they are? I don't know that they're going to, because they'll definitely put two and two together and realize, and I mean, let's face it, part of why they brought immigration in is many reasons, as they say, most of it bull. The reality of it is we needed it to drive an economy that is slowing down. So that's a long-winded rant, but that's ultimately what we're facing. When non-permanent residents get cut back, we are going to see an even bigger slowdown economically.
Now, tell us about this chart, Patrick. I think you put, you either put this chart together through some StatsCan data, or you got it from StatsCan. I'm not sure, but I thought this is a really great chart because it kind of show you the population kind of components, the makeup, and also gives you a bit of a prediction in terms of where it's going. And it looks to this like we're going back to where we used to be, which is 300,000 new people in the country every single year. Not what we've had in the last couple of years, which has been several hundred thousand more than the kind of our average or our mean, if you will.
Well, it's more like 1 million plus more. So the point of it is that when you look at this chart, you start to see that orange line, which is non-permanent resident, and you start to realize that, think about the impact that's had on us, not just economically, by the way, but how it's impacted our infrastructure, how it's impacted demand for rental housing, for example. So the reason I want to shine a light on this particular chart is a lot of the exuberance we have in the real estate, rising rents, rising prices, demand for investment real estate has been driven because of that immigration into the country. That's a big part of why our real estate has been doing it. So as investors, when we look and say, okay, what's going to happen if they pull back on non-permanent residents? That's like saying, okay, all these clients that you had, all these potential tenants are now going to be cut off. They're going to slow it right down, by their words. We saw the impact of that, for example, with student housing. We've got a model. Okay, well, what happens when they do that? Well, I'll tell you what happens. There's nobody to rent those units, and we see that in the student housing. Now, that's only to say that the savvy investor will make sure that they're got great units, that they are in demand, they're paying attention who their tenant client or their tenant profile is. I'm not worried about it, but there's going to be investors out there that aren't paying attention to it, aren't really producing great units, aren't really clear on who their end user is going to be from a rental point of view, and they will actually struggle, because if the federal government does follow through on this immigration policy, you can see what the forecast is for non-permanent residents, and it falls off the cliff. They're like shutting it right down. That represents like 1 million people, JG. And so that's a big concern.
Now, but what you're saying, just to be clear, Patrick, because this is important, because what you're saying is if you're a rental housing provider and you're a landlord and you own real estate and you're renting, you have to think about your audience, called your tenants, called your clients, and you need to adjust perhaps or pivot who you're renting to if you're going to stay in this business. Because people hear this as, I shouldn't get into real estate because of this. But that's not necessarily what you're saying. You're saying you just got to be aware of who you're renting to, and you may need to change up your strategy. The same way I've been saying for years now, Be careful on Airbnb. Don't put all your eggs in the Airbnb basket. Don't put all your eggs in the student basket. You have to be, you have to consider these things when you're in real estate. Real estate's not just like perfect. It's a business. You have clients. You have to market. You have to do sales. You have to do marketing. And all of this is a part of the real estate business, isn't it?
It is. And the thing is that you got to put a lot of stuff together in all of this. And ultimately what will eventually, well, I believe what will eventually happen, in my opinion, is the bank will, or the federal government will go back to stimulating the economy. We'll have quantitative easing at some level, some monetary policy that will shift, because the economy is definitely going to be slowing down. We are going to get very uncomfortable in 2025, in my opinion. When I look at the data, that's what it shows. Now, here's the thing about that, is that those individuals, so we look at what's going to happen economically and we beat this drum, and I can't stress enough, we as savvy investors, sophisticated investors trying to create a financial future have to say, how do we do that? There's a lot of people that are sitting on the sidelines doing nothing, afraid of real estate. It's going to be a bubble. It's going to crash. It's not going to crash. Will it come off all-time highs? Yes, and it already has. I think Vancouver's back to 2019 kind of numbers. So if you bought at the high, yeah, you got beat up. You're down 300,000-400,000. It's a game. It now becomes a waiting game for those particular individuals. But I think we have to understand that when we look at what's happening economically, you need to own hard assets. Real estate is one of those hard assets. It is a risk-off kind of asset. So if you look at a 5, 7, 10, 15-year plan, you need to own those assets. If you don't, will be the diverge in economy and in, I guess, socioeconomic class. In other words, those who own hard assets, i.e. real estate, when you look 5, 7, 10 years down the road, given what's happening with the global economy, this is a global conversation, they will, in fact, enjoy the benefit of owning those assets. Those who are sitting on the sidelines waiting for real estate to crash, they're going to be sitting there and they're not going to buy in, and they're going to lose it. We've talked about this before. The increase in real estate is already worked into the cards. Our Bank of Canada, our government tells us we have to have 2% inflation. As a matter of fact, JG, they're worried about deflation. And in some sectors, it's going to be deflationary. So if you've got a government saying you're guaranteed inflation 2% a year, that's going to impact all asset classes. It just is.
That means they're going to artificially inflate things at 2% per year forever. That's what their target is.
Does it get easier?
No. Yes, it gets easier.
The reality is, I don't care what government it is, whether it's our NDP Liberal government or the Conservatives, it doesn't matter. You're going to put a government in there, and the last thing they want to happen is for real estate prices to come down. They talk about it in affordable housing and blah, blah, blah. How affordable has housing how affordable has housing become since they've started that narrative how many years ago now? It doesn't get more affordable. As a matter of fact, it gets more expensive. And they're not building anymore because of the zoning and the bureaucracy, and builders and let's face it, developers are, they're going broke right now. There's a lot of that's going to work its way through the system. It's going to be a long time before we see real estate drop because it's not in the cards. It's just not.
Now, Patrick, you talked about prices. Put up this chart on the screen about these prices, and this is a good example. You talked about Vancouver maybe being back to 2019 prices. I'd have to see a chart of that. I doubt that very much. You might be talking specifically condo markets, the condo market in Vancouver. But there you go. That's real estate investors that read the headlines. They get confused like, oh, real estate's back to 2019 levels. No, it's not. Read my lips. It is not. If you bought a condo at the tippy top, yeah, you got your ass handed to you. We told you not to buy condos at the tippy top. There's a dumb move. What do you want me to say? But the fact is that real estate has not gone back to 2019 prices. This is an average price chart, which we hate average pricers. I don't even know, I'm not sure why we show it. But the fact here is, Patrick, is the average price was $460 in 2019. The average price is now $685, roughly in the middle of this summer. That's what it was. So the point is it's still way up from where it was in 2019 across the board. And I know in my particular case, I bought some property in 21. I bought property in every single year since I started in 2010. And I could tell you that all of my properties are still up considerably from where I bought them. But I don't own any condos in Toronto either. So I'll leave it at
The thing about all of this is when we look at where real estate is going, and even if they cut back on non-permanent residents, and by the way, if they say they do, you're going to watch our population continue to grow quite well, because all they'll do is shift. And then all of a sudden, those non-permanent residents will all of a sudden have the opportunity to become permanent residents. So as much as they are going to cut back on non-permanent residents, there is going to be likely a shift in terms of, okay, well, you can become a permanent resident. So they'll open up the doors to having visas where you're more permanent. So that's one aspect that will probably happen. These are just kind of my views of the world and when I see what's happening.
So if you like these episodes and you want to learn more about what's going on with real estate in Canada, investing in real estate, and understanding how to invest in real estate the right way, head on down to the descriptions below, follow those links.